So in this video, I'm going to give you an inside look at my investment portfolio at 24 years old, exposing every single stock that I hold and showing you how much money I've made or lost. But first, let me reveal the other investments that aren't in my stock portfolio yet make up my net worth. I have two pension accounts, one with Aegon, if that's how you say it, that is entirely invested in an S&P 500 accumulation fund with UBS, and this is valued at around about £2,360. Then I also have a free trade SIP that I don't often share on YouTube, and this includes an allocation of 62% to the S&P 500 and a few other stocks like Dunelm, Kingfisher, Sylvania Platinum, and the London Stock Exchange Group. In total, this SIP is worth around about £3,400. Oh, but there's one more thing that I haven't mentioned on the channel. It's my employee share scheme. This is with JD Wetherspoon, and at a share price of £6.85, the total value is £7,411. In all, my investments outside of my portfolio roughly account for around about £13,100. And before I show you what's inside my stock portfolio, I'm going to reveal my new investment strategy. So when I started this stock portfolio, I focused on growth stocks. I wanted to build wealth quickly, and naturally it seemed like an obvious approach to buying growth stocks in order to beat the markets. After all, if they grow faster than the markets, then surely they'll perform better. However, a few years ago we had very low interest rates and governments were handing out free money. The lockdowns forced businesses to close, and it pushed a lot of bored people to invest their money in the stock market. As you can imagine, this made things more extreme. This led to prices of companies skyrocketing even as profits fell, and people were given free money to continue relentlessly buying stocks. Therefore, at the time, I believed that you could buy quality companies at almost any price and see a good return in the markets. So with this knowledge, I ended up buying shares of a stock as it was crashing. I believed it to be a golden opportunity and one that would surely help me beat the markets. This stock bounced back quickly, and within a month or two I was sitting on a respectable 40% gain. However, as I saw the stock price rise, I had an urge to buy more. After all, if it's gone up 40% already, why wouldn't it go up more? Well, this time it actually went up again by about 25%, and I was thinking about how I could spend my vast riches on a new motorcycle, until bad news struck. And it didn't just strike once, it struck multiple times. For starters, we indulged on issues with the management with the company. Then for dinner, we had a sprinkle of governance problems topped by several of their finest profit warnings. Shares not only started to fall, but collapsed in value. Since I made money on this stock in the past, I came up with a genius plan to buy more. And it went well, until it didn't, where until a few months ago I was down by over 70% and I was in a tough pinch. Buying this stock made me really overexposed, and therefore I sat on a pretty heavy loss. In that moment I knew that I had to make an important decision: continue sitting on a loss and ignoring the problems, or face the music and take action. My action therefore was denial. I would never do that. My choice was to sell all the shares of Boohoo, and I didn't only realise the capital losses, but in that moment I also realised the mistakes of my past. I therefore strived to become the opposite of what I once was, becoming a cautious value investor that's looking to find quality businesses that are predictable at a good price. By focusing on valuation, I hope to avoid repeating the mistakes of my past. So what is inside my stock portfolio and what shares have I been buying? It's likely that some viewers already know, and that's because they have live access to my portfolio. It's completely free, and if you'd like to find out more, click the link in the description down below. About 2 months ago, I was buying shares of an oversold stock. This stock was the Watches of Switzerland Group, and since buying, it's up 25%. I've also seen good results with Halma. I bought this stock with some of the money from selling Boohoo, and it's up about 17% since then. Although it's not all good news, we've had a few problems in this portfolio as well. I ended up buying shares of a stock for its defensiveness, for good diversification, and ironically a few days later this company had a profit warning. So I'm currently down about 9% on Diageo, but I kept my position size small and I will keep it that way as I have no intention of buying any further shares in DGE at the moment. My worst performing stock continues to underperform, and that's because it's very cyclical. Whilst the share price has only fallen by about 15%, the damage is in the price to earnings ratio, because it's actually getting higher, and this is because the profits are falling, and that's due to dropping commodity prices. losses, but fortunately I've remained disciplined in keeping the position size small and understand that this stock, being Sylvania Platinum, can be very volatile and has its risks, therefore it's a very small portion of my portfolio. I did have another top performing stock that was up 20%, however this stock also had a profit warning due to a one-off lack of poor weather condition and ongoing strikes. I think the market overreacted on this one for a quality company, and I've bought 5 more shares of Ashted Group on the dip. I do have a few stocks I'm keeping a close eye on at the moment. These companies would certainly add and benefit the portfolio over the longer term. One such stock I'm looking to buy more of if it falls into the $120 region is Google. Okay, so how much money have I made investing at the age of 24? Well, my Aegon pension is up about 5.6%. My SIP with free trade is up 12.5%, with a majority of the deposits a year ago. In my main stock portfolio so far, year to date, I'm up 14.3%, which has outperformed the FTSE 100 that is flat, but underperformed the S&P 500 that's up 20%. However, I still have a lot of ground to cover in catching up the benchmarks because I'm underperforming the S&P 500 that's up 86%, the FTSE 100 that's up 38%, and I'm down in this time nearly 43%, which means a portfolio of £23,000 is down approximately £17,700. But given my stronger recent returns, you might be interested in discovering some new value stocks. Do I know of any interesting stocks? Well, yeah, click here to learn about this stock paying a 10% dividend yield.